Hey everybody, this is Jim at SP500chart.com. It is 4:11 on the East Coast here, just north of Atlanta. We have snow on the ground, and we had a rather rough-looking day in the markets. But we're going to take a look and see if there isn't a silver lining to this cloud. Before we do that, I just need to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I control lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look and see if we can make some sense out of this. I think we're probably best served by starting on a 10-minute chart. You'll remember that we'd been watching this kind of a different looking little channel, and I say it's different because we had a resistance line and a support line that were diverging. Now often we see this kind of downward channel converge, but this one is diverging. Now, let me show you something that's an interesting thing that you will often see in charts. Clearly, this line had 1, 2, 3 touches. Now, let me clean that up just a bit. There we go. We broke out over this line yesterday and back tested it, but formed a little flat-topped flag of sorts, and we didn't really know at the end of the day yesterday if this was going to break up or down, because it was kind of near the apex. That probably means if it hadn't broken out by about 3 o'clock yesterday afternoon, I guess it's safe to say as you get really close to the apex, you ought to consider that it's maybe suspect that you'll get an upside breakout. And today we got a downside move. Interesting to note, the initial move stopped right at or within about a point of being, maybe a point and a half of being a back test on that line. So now this line broke out and we had 2 back tests. And now, before we arrived at this diverging line, I'd mentioned that there was a possible interpretation that we actually had a much narrower pattern that slightly converged. And you can see how, if we start the our first data point up here just underneath 1850, that we have a lot of points that line up on this line. Then if we still let this be our, what's the word I'm looking for? The point at which we rotate this line, we go here. And we've got points that line up. We have technical significance that lines up. Watch. Now we're going to rotate it here. And we've got 1, 2, 3 touches on that line where this line has shown itself to be resistance. You know, I'm going to leave this right here, and we're going to kind of do the same drill that we did yesterday, and that is, even though we are now over this line, and by the way, I said that would likely, getting over this line would likely be the start to a setup to give us a reversal, to head back up. And I still think that's likely what's going to happen. But the next step in that process, because the reversal isn't always just a hairpin turn, I would think the next stop or the next point in that process would be getting over the line where it appears now on the chart. Okay, so I'm going to leave this right here. If we get up over this line, then I think we're probably going to encounter resistance again. I'm going to make this a different color just so it's a little bit easier to keep up with it. Eventually, that may end up being a neckline. I don't know yet. It may not. So right now, I would say the next thing to look for, if you're a bull, and if you're looking for a sign that we are indeed finding bottom right around here in the low 1770s, would be to break out over this resistance line. And again, it could back test again. And a lot of times when you add up all of the moves that form in a reversal, you'll find that you get this funny little play, this funny alignment of significant points on a trend line that has as its point of rotation either the high or low that was just prior to the leg down. So, but this gray line, let's take a look at it real quick. You'll remember we talked about this yesterday, that the gray line that is slightly rising was drawn over the three tops that formed from May of 2013 through September of 2013. So it'll be interesting to see if we bounce on that gray line and then we start to take out a succession, potentially, of these resistance lines that we just talked about a few minutes ago. So the next one that would have to go, obviously, is this line right here. If we get up over that, so I would say a breakout above 1780 at some point tomorrow, or wherever it might happen in the next couple of days, would be the next indicator that we may be forming bottom here. Now, there's always an alternative, okay? If this gray line doesn't hold, then we have a speculative channel line down here in the 1740s. Okay, that's another thing that could come into play. But the fact that we bounced, that we back tested on that previous positioning of this line, I take that as a pretty good sign that that at least we're done with that strong sell-off. Even though we were down over 1% today, it happened in a way that really doesn't bother me that much, because we back tested and then we came down and we are over, not by much, but we are over our gray support line from those three tops. So let's kind of keep our fingers crossed. We're not out of the woods yet, but this isn't looking that bad. Just keep in mind, oftentimes a bottom is a process. It's not a one-time event. It's not. Sometimes it is, but more often than not, you have to work things out at a bottom. And let's hope, if you're a bull, that this is what we're seeing the S&P do here. Again, the next step will be, let's see if we can move up and over back into the 1780s. I would take that as a very good sign that this market is willing now to start putting itself back together again. And hopefully we'll see that happen. The only other thing I would like to note, just very briefly, and this is just a matter of identifying chart patterns and getting used to doing that, we did have a bear flag that took place early in the day. We came down hard to about 1775 and then rallied up to 1787 or so. But that happened in the form of a rising wedge. So the good news is, as we look at what took place after that broke down, we don't see another rising wedge, at least not yet. So I'm hopeful that we may see a meaningful bounce in the low 1770s, but we'll know more about that tomorrow when we encounter, likely we'll encounter this descending blue line, which is now resistance, But let's see if that can be broken out over. So guys, I want to thank you for watching the video. Thank you for your support. Let's see what the rest of this week brings us.